Hello and welcome to Apollo Investments investment consultation. I do it in a presentation format, and I am David Stewart. I'm one of the investment consultants for Apollo Investment. So today I'll be talking to you about the Specialist Disability Accommodation Scheme and how to successfully invest in the space and the re expected returns in the market that you will see. Skimming through. We've got a disclaimer here. I'm not providing you any personalized financial or tax advice in this presentation. Now, how to know whether this opportunity could be for you. The SDA scheme, or the Specialist Disability Accommodation Scheme, it's essentially a residential investment, but it has some sort of elements that would replicate maybe a commercial investment as well. So maybe think of it as a hybrid between residential and commercial investing. But at the end of the day, you're going to own, what would look like a residential property. When you work with Apollo, it will be a direct property investment. So you will purchase a plot of land and build a compliant property and eventually register it into the NDIS scheme, or more specifically, the Specialist Disability Accommodation Scheme. And your tenants will be people with, you know, disabilities that require, specialist housing to improve their quality of life. Now, if you're seeking sort of 10 to 15% yields on investment, that's generally what, that's easily achievable in this space. You can get returns higher than that, but I always recommend make your decision around 10 to 15%. And if you get higher, that's the cream, right? So uh, make a decision on the more conservative figures, and then we'll move forward from there. Now you've got the scheme here, the annual income here, the additional annual income of $50 to $150,000. The reason that's a reasonable spread there is because every investor I speak to, or we speak to, will have a different sort of amount of capital that they're going to invest on the way into the investment, and they're also going to have different entity structures and tax obligations and percentages and stuff like that. So, to make it nice and easy for you, 50,000 returns would be somebody who's putting less deposit down. So say, probably close to 20% deposit, maybe even a 10% deposit. And, just sort of probably a 30% tax rate. You might have $50,000, $60,000 after all your costs. Whereas somebody on the $150,000 end, they're probably doing a cash purchase there, and they may be in a low tax environment. So that's your spread there. It's somewhere between that sort of equation, 50 to 150K in your pocket after tax and expenses. Now, long-term tenancy wise, how the scheme works essentially is you will build a property that is fully compliant underneath the SDA requirements, and then you'll get your property registered and enrolled into the SDA scheme. Now, there's a 20-year commitment to you from the government. So that has bipartisan support. It's fully legislated. That's not going anywhere. So you'll be able to access the scheme for that 20-year period. Now, tenancy wise, the the participant, you'll have a property manager in place. So you'll have like what we call an SDA provider, and there will be, just like you would with any other you know, property investment, that they're your property manager, and then they will, assist you in finding tenants for the property, and then there'll be a lease agreement between those two people, so the SDA provider and the tenant. Now, those leases generally work, probably more like a commercial investment, so they can be quite long, but we quite often see something like a 5+5 agreement. Now, with that in mind, the way we approach the investment and the way we think about the investment is, there is a housing shortfall, right? So there isn't enough SDA homes. So what we want to do is build homes where the participants want to live there forever. So we think it's better to build a home that has nicer fittings and fixtures and elements that make the everyday living of the participant better. So above and beyond that of what the SDA minimum requirements are. So that then, potentially that participant will make that their forever home and live there forever. You've got to think about your end user whenever you're doing any sort of property investment. But in the NDIS space, as the market or the pool is smaller than the residential investment space, you need to really be focused on your end user. And if you if you get into their shoes and think about how they're making this decision, it's not like a typical renter where it's sort of a budget decision around an area that they'd like to live in. It's, the funding comes from the government. So they're making decisions purely on what's going to improve their quality of life and what's going to make them happy. So if you can provide that, you're going to have longer term tenancy, less changeover, and have a far more successful investment. So we think it's better to make the extra effort and spend the extra money on the way in to have a better outcome for the end user, which and therefore will end up as a better outcome for you. Last but not least on this slide here is it's an ethical investment. It's very much a humanitarian investment. You are improving the quality of life of people with severe disability in Australia, and quite often they are living in, um, you know, poor living outcomes essentially, or places like hospitals and aged care facilities is where they quite often live. But even other circumstances like living in group homes generally isn't the best outcome. And they may also be somebody living at home with aging parents, and the parents can no longer provide the care that they require. So your house is the house that you're building, right? It's really about improving the quality of life of participants and you know allowing them to you know, achieve their goals and have a better outcome, essentially, is what the whole scheme is designed to do. So what is SDA housing? So it's, like I said earlier, Specialist Disability Accommodation is the scheme. So the NDIS is the overarching scheme, and then the SDA sits underneath that. Now, it's not all participants receive that funding. It's somewhere between 6 and 8% of NDIS participants that are forecast to receive the Specialist Disability Accommodation Scheme funding. And the houses themselves are purpose-built, residential properties, but they're purpose-built to, have accessibility features to improve the quality of life of the participants. Uh, you know, the houses themselves, they look like big, spacious, beautiful residential homes. Especially when you work with Apollo Investment, we don't like it to look too institutional. We want to make it feel very homely. So again, we go a little bit above and beyond to improve the quality of life of the participant, but also increase the likelihood of full tenancy for our investments or our investors. So some key elements to go into these properties. You need uninterrupted access way into the house. So you got pathways. There's nothing sort of stopping. I guess it's just full wheelchair access all the way through the home. Wider hallways, wider doorways. The bedrooms are usually large. The bathrooms are. These are we say hospital grade bathrooms, but we still make them look like nice beautiful um, bathrooms, floor to ceiling tiles. It'll be an open shower, so you got full wheelchair access in there. Then you got like the bench seats and the rails and all of those elements. You may have adjustable sinks. You may have automated taps. It'll depend on the participant and the funding. So you just got to generally provide the infrastructure. So you might have cabling to the tap, and then if a sensor tap needs to be installed, then that will be done through the NDIS's budget for the participant. Same thing with the hoist there that you can see on the ceilings. You as the investor will provide the reinforced walls and ceilings, so there's more timber essentially. But if the hoist needs to be installed, the participant, that'll come out of the NDIS participant funding, because not all SDA participants will need a hoist in their bedroom. Uh, you know, Going in further into the house, we'll generally have some sort of communication system, so like a, tablet type, so that we can see, who's at the front door. You can talk to your carer. So, communications through all of the household. Backup battery systems, adjustable height benches. You'll generally have, for example, and this will happen in many locations, but say a stove or a sink, you'll have full clearway for knees and feet, so a wheelchair can access it, so that we won't have cabinetry underneath those sinks or stoves. That's sort of the key elements, and then there's an 85-page document that of compliance items. Those are just the key ones that I'll bring up today. Who's it for? So I've mentioned this a little bit, but then the people on the NDIS who have special funding called the SDA, SDA funding, they are generally the participants who need the most care or the most supports, which is, referring to things like hoists and adjustable benches and things like that. So, generally, the reason that they're living in places like aged care facilities is, those are the only the housing scenarios that actually have the facilities that can house these participants. But because that's not a great outcome for autonomy and lifestyle and quality of life, that's why we want to move, well, I guess the government wants to move investment into the residential sector and provide these facilities and more houses, closer to towns and improving the quality of life, I guess is the summary there. A couple of benefits of the SDA investment scheme. So, or the SDA investment property, like I said, make your decision based on 10 to 15% yields, but we have seen higher yields than that. And again, that will depend on your preferred calculation. Um, High cash flow rising with CPI. So we actually have a CPI adjustment in this scheme, and that mitigates the interest rate risk that is ever present in residential investing at the moment. Capital growth, you'll still receive capital growth in that area. Now, we don't, as a group, we don't ignore the typical drivers of capital growth. We generally don't like really rural areas, for two reasons: capital growth, but also how many participants will be in that area. So, we're still looking for estates where there is substantial investment going into the infrastructure around the estate as well. So schools, hospitals, shopping centres, public transport, all those elements that would make a suburb attractive, parks, things like that. So you will receive capital growth in that area as well as the high yield that you're going to receive, from the rental income. Increase investment capacity. Now, in this discussion, I won't go into the finance too much, but some of the lenders, our key referral partners have been using, they will use the income off of the SDA property, which is substantially higher than the residential property next door. And what we're finding is that's allowing people to go back and you know build their portfolio, based on that serviceability. So the debt to income ratio is not getting capped out as early as in a residential investment. So that's one of the big key um, benefits that I like in this investment. The low risk government back side of things is, like I discussed earlier, the schemes, you've got access to the funding for 20 years. Once a participant's in place, your rental income will be coming from the government. So it's coming from the NDIS scheme. The 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 returns of 10 to 15%, the most similar property investment would be something like a high performing commercial investment. And with that, you would have, other risks like delinquency risks, like a business going bust and, they're not paying their rent and you've got to go through all the legal issues with that. That's not present in this investment. So you will receive those returns as long as that participant's in that property. Paying off your home sooner, so you can use any of the other residential investment strategies. At this stage, the lenders are still offering interest only in this space. So, people are switching the investment over to interest only and paying down their primary place of residence faster. That is one strategy, and again, you want to talk to your financial advisor and tax agents about that. And then, we don't want to ever ignore this element that we're providing safe and appropriate homes for people, for those living with disability, and we're helping solve Australia's disability housing crisis. So there is still a housing crisis. There's people, there's not a participant shortage. There's a housing shortage. Most houses don't have the facilities to provide improved quality of life for people with disability, and so you are going to be building houses for these people. And generally, I say to a lot of my investors, your side hustle will be building houses for people with disabilities. It's actually a really good thing. Now, common mistakes, we make sure we bring this to the forefront because you will get onto Google and find that people have poor performing investments in this space. And there's generally a common theme for that, but it's, the overarching theme is, lack of engagement with, the NDIS providers themselves and the participants, right? And forgetting who the investment is for. You've got to be a very end user focused in this space. So, you know, what we recommend is work with specialists in the field. So, we've got our first point there is dabblers. A lot of groups will be doing, dual key properties, uh, townhouses and multiple different elements in the property sector. This scheme itself there's a lot of ins and outs and things that you need to know, and you've got to be really well networked with actual providers outside of the property industry. It's more the element that makes you successful in this space is being really well networked in the SDA and the NDIS. sort of provider space is where you really need to be, focusing your effort. So that's where dabblers have issues because it's not all about the build; it's about the NDIS. Saturated markets. Now we never want to put our investors off. There's still a lot of opportunity in this space, but you just got to be aware that some areas have had more investment than others. So, I generally use Southeast Queensland as one of the examples here. Uh, you know, some of the areas, when we look at like Logan in between Brisbane and Gold Coast, it was one of the investment sort of hotspots over the COVID boom. We had low interest rates, lots of investment in property. A lot of the people from the southern states were liking the investments up in the north here in Queensland. So, that was one of the areas where there are states with too many SDA properties being built. Uh, Now, I do have clients who have properties in that area and they're performing quite well, but you just need to be aware that there are areas that have more SDA than others. So you want to we talk to councils and providers and people like that to find out, what's going through, building approvals, where people have the most listings, all of those things to ensure that, we're not going into those areas. Now, wrong location, obviously a saturated market is the wrong location, but we're talking more about access to facilities and infrastructure and things like that when we're talking about wrong locations. Like, so the participants want to, again, the scheme is all about improving quality of life, and access to infrastructure and facilities is a key element to that. So, if the participant can easily access public transport, and it depends on their own capabilities, but the more access more independence, I guess is the better word, that they can have due to your property, the more successful your property will be as an investment. Overpaying and hidden costs. So, I don't like to dig into this too deep, but you need to be aware of how the investment property industry works. So, essentially, what can happen is there'll be non-disclosed commissions between the sales group and the builder and yourself. So, the agreement between the builder and the sales group will be that, whatever gets tacked onto the build essentially is what their commission will be. And they can charge it out as a marketing fee or something like that. I'm not sure on the ins and outs of the contracts there, but we've seen those commissions be quite hefty. And you just need to be aware that those are costs that have been added and inflated into these build costs. And the other concern that you need to have is the NDIS scheme itself. The certification costs and the registration costs and the costs associated with SDA providers and placing participants into property, that actually can add up to a substantial amount. It's not uncommon to be close to sort of $35,000 to $45,000. Uh, Sometimes they'll get built into the building costs. And then, if you've got a hidden commission and you've got the compliance costs all built into the building costs, what we have seen is issues with valuations in this space. And I'm sure you're probably aware, but if you undervalue, you may have to come up with funds overnight to actually keep your project going or potentially lose any sunk costs associated with the investment. So you just have to be aware of where the funds are going. There are costs associated with doing one of these developments. And poor quality. So, we do consult with a lot of SDA specialists, so SDA certifiers, SDA building inspectors, architects. We're doing a lot of consultation with key players in the field, and the feedback we get is a lot of the properties are sort of investor stock minimum compliance homes, and that's generally not what the scheme is after. They want private investment to make the housing situation better for participants. So they want to see innovation and quality, because there's a competitive element. So we never recommend building those minimum compliance homes. So, what led Apollo Investment into the space? The team themselves have all found the NDIS scheme through different sort of pathways. Nick, our head of acquisitions, he came across the scheme because he had, I think it was nieces that needed SDA housing. And then obviously being a property investor, the returns looked attractive, so he sort of moved into the area. Whereas Tony was just he was finding you know investments that property investments that were the best performing for his clients. So there's a full spectrum there, but we found that the guys have developed a quite a passion for providing housing for people with disabilities, right? And that passion's evolving and growing as we get more and more involved in the space. And what we wanted to do is just, improve the outcomes and house as many participants as we can. And how we do that is through private investment through our investors. So the end goal is to get as many, SDA homes filled with participants, out of aged care facilities and hospitals. But we need to look after the investors to achieve that. So what we wanted to do was make sure that, essentially we could hold the hand of our clients and teach them how to invest in the space successfully. And then therefore they'd probably want to do it again, and then we can house more participants. So, what we were concerned about is if there are sort of people in the industry, taking advantage of clients and investors, the only person who will, you know, be get the shortfall out of that or the short stick out of that is the participants because there'll be less homes for them to live in. So this is our team. We've got Nick Alizio here and Amy Conti. They are the key players in putting your investment together. So Nick looks after everything to do with the property side of the investment, and Amy's the head of tenancy there. So she's looking for those areas of high demand and creating relationships with the providers who are, I look at the providers like they are your business partners in this investment. They're pretty important to have a really good provider there looking after your property, ensuring it's compliant and your tenants are happy and they're going to stay there for a long period of time. So Nick's got everyone's got a lot of experience here. Nick was working in has always worked in the construction industry. He's got 30 years of building experience. Uh, all the way back from, being a senior executive at Henley's Construction Group, which is a large builder in Victoria, and working in investment property and has a substantial portfolio himself, and NDIS properties are within that portfolio. So he's got a lot of experience to offer your project. And then we've also got Amy. Amy's come from Simmons Homes. She was a senior executive there, very key figure in their NDIS, their SDA building process. And with that, she grew a really large network of NDIS providers or SDA providers, and what's also called SIL providers, so support independent living providers. And that's essentially why Apollo Investment really wanted her on board. Was she's a very key player in the NDIS or the SDA space, which opens up a lot of doors for us to meet the relevant providers to help our investors invest in the space successfully. So at the end of the day, everything's geared towards ensuring that we're got the right network of providers, which gives us the feedback on what the tenants require and and where the demand is, and then we teach our investors or show our investors where we would like to place that property. I'll talk more about those two later down the track. We've also got Yannick and Carly here. They are the co-owners of the Melbourne Mortgage Company. They are our key referral partners when it comes to finance. Yannick was actually heavily involved with the actual creation of the financial products that most people are using in the NDIS space. So they're a very experienced team in NDIS lending. It's important to be aware that not all lenders in the space are, not all lenders, out there are lending to NDIS investment properties, especially during the construction process. So you need to be speaking to experts to actually get the finance side sorted out. And because I'm not a licensed mortgage broker, I won't go into it any further than that. I will just refer you to that team and they'll give you their expert advice. We got Tony here. He's the CEO of Apollo Investment. Again, very large background or 10 years of property development history. He's also worked as a financial planner, but he loves property. And, he came into the NDIS space trying to find, excellent returns for his investors in some previous businesses that he owned. And over time, he just got more and more interested and passionate about the NDIS. And, so these guys got together and started Apollo Investment. Now, Tony's role in Apollo Investment is essentially creating commercial agreements with people like builders and developers and providers so that we can get the best results for our clients. So, you might be putting together something like a volume deal with builder, and then we can pass those deals on to our clients. Because of our fee for service model, all of those benefits go to our clients. So that's what Tony's role is. And then he's also helping Nick with the property side of things. And then last but not least, we've got Koi in the process as well. Again, he's an external referral partner. We think it's really important to ensure that your entities are structured correctly. So however that's, however you're currently structured, if you've got structures in place, we will review that and make sure it's the best for the purposes of an NDI investment. And if you don't have any of those structures in place, Koi will assist you and advise you in that realm as well. Now, these properties they do produce a substantial amount of income, so it's important to make sure you do that on the way in, to be structured correctly, because unwinding structures or changing structures down the track can be expensive, and that's why we think it's really important to get these elements done correctly first before we even start talking about property, because the market in the SDA space is moving reasonably quickly. We need to make sure you get your finance sorted and your structures sorted, before we even start looking at a project for you. Go check out our website. There'll be links to all of these sort of media appearances that our team have had. What I generally talk about here is, these guys are definitely the experts in the SDA investing scheme, and they are, some of the news outlets will actually approach our team to discuss this investment. Same thing here over the next 2 pages here are, reviews. We're really focused on getting testimonials from our clients. So go check those out. We've got links on our website. What is your why? I won't really do this in this recorded film, but it's important to understand why you're actually looking at this investment. So what do you want to achieve with the income? So we'll talk a little bit more about that later down the track. Let's talk about the returns. Now, obviously, every single project in this space will have different entry costs and different return data. And the reason for that is, we build nationwide. So land cost is generally the biggest variation in your investment. But some builders will charge more or less, and same thing with timeframes and things like that as well. Builders in some areas can deliver quicker than others, so your holding costs will differ. But then the other element that we're juggling there is you have a location factor in the, the rental calculation, that you'll get from the SDA. So you've got a location factor. You have 4 different categories of participants. If we built, say, a high physical support property, you could potentially have a high physical support in your property, independent living participants, or fully accessible participants into that property. So you've also got different funding related to the category of the disability. So location factors, categories, acquisition costs, they all change the investment returns. So at this stage, we just got a model for you to review. And like I said, make your decision based on 10 to 15%, but you will see variations on that. So, again, this is pretty common that we can put together for our clients. Somewhere around the 850 to 900 is probably the most common projects that we do for our clients. That's in places like Western Australia, South Australia, regional Victoria, and Tasmania. But we can deliver nationwide. And then, obviously, if you're getting close to Sydney, it's going to cost more than somewhere like South Australia. So, you know, just base that on the areas that I mentioned. But some of our clients have portfolio requirements where they want their property close to Sydney or something like that. So, like I said, just be aware that those will change based on location specific to what you would like to achieve as well. So yeah, 850 to 900 is pretty common in this space. And your required investment here is generally somewhere between around $250,000 is generally a good ballpark figure. So in this equation, it was 241. So you got your 20% deposit there, and you've got all your costs associated with building an SDA property, so all your certification and compliance requirements, and any sort of project fees that come into the project as well, and dealing with Apollo. So you got sort of $250,000 there. Now, the yearly income on this model, what we've done is we've set that at the median capital city rate. So for 2 high physical support participants in your property. So this is a 3-bedroom with OCA. So what that means is there's 2 participant rooms, and we build an ensuite for each of those rooms. And OCA, which is overnight care assistance. So that's another room with a smaller typical ensuite in that room there as well. Like I said, the higher physical support, one of the reasons we recommend that category build is you can place participants in the independent living and the fully accessible categories into that property quite easily as well. So you're just broadening the pool of participants that can live in the property. Now, your expenses, so we've got your loan repayments in that equation there. You've also got your SDA provider fee. Now, SDA providers are all private entities. They'll all charge different amounts. We can generally negotiate those providers to somewhere around 12 to 13%. It's not uncommon for them to ask more. We do actually get a bit of a volume deal for our clients on that fee there. We've also got anything like your rates and your insurance in that expenses as well. Now, tax-wise, we've got this set at 30%. Obviously, like I said, at the start of the investment, everyone I'm speaking to has a different structure and tax obligation. So 30% is a good sort of ballpark just to make your decision around. So 25,630 in this case. And our yearly profit in this equation is actually $80,929, which equates to a net weekly income of $1,556. So if you compare this to any other residential investment, you're killing it essentially. Like there's no comparison. It's a no-brainer. It's a very exciting return, but it's all about ensuring that you do it correctly. Make sure you're thinking about the participants on the way in to secure that tenancy to ensure that you get those returns. So this is a gross rental yield of 22%, and your net rental yield is 19.28%. Now, you need to be aware when you're dealing real estate, the net rental yield is, your rent after expenses, right? So it's like your earnings before interest and taxes, um, and depreciation. So, that's where so that you compare, apples for apples. So, some of my clients wouldn't be knowledgeable in that sort of that return metric. So that's where that comes from. And then the return on investment, this is one of my preferred return metrics. This is based on, what you got here of how much you invested. So that's pretty exciting as well. If you compared, your capital allocation based, if you're putting that into sort of shares or something like that, you wouldn't likely get 43%. So pretty exciting. This is a fully accessible example. So same thing, 3-bedroom with OCA. So 2 bedrooms for participants, 1 bedroom for the carer at a fully accessible level. So, all the line items have the same um, elements in them. They've just been reduced because of the build cost and the differences in rent. So, obviously if we're building in a lower category, the build cost will actually be a little lower. Therefore, your required investment's a little lower, and your yearly income's a little lower because we're placing 2 fully accessible participants into that property. Now, our expenses there are a portion of the gross rent, and then obviously our tax is 30% of the profit after that. So at the end, we're receiving about $75,000 in this equation. So again, I said all the line items are the same. It's just because it's a percentage of the acquisition cost and the rent that the adjustments are there. So in this equation, we've got a 22% gross rental yield, 19% net rental yield, and our return on investment has 43%. So it's an excellent investment, and like I said earlier, it's a no-brainer. If you're doing residential investment, you definitely want to have a look at NDIS properties. So the guys here have built me like a traditional versus NDIS example. Now the traditional, I'm not sure where this example was put together from, but I think Nick might have done this in one of the suburbs, like outer Melbourne suburbs. Rental income, this could probably be adjusted up these days. That's becoming quite competitive. We're talking about the rental crisis every day of the week at the moment. But if most investors would be aware that if they were going to invest in the residential space with a 20% deposit, you're probably going to be looking at negatively geared for a number of years on the way in. Again, that depends on each investment and how much capital they're putting in, and the interest rates and all of those elements. But $207 negatively geared there. The NDIS property, this is a pretty high performing example. This would be somewhere like Western Australia or something like that. We're looking at $1,900 a week. So you're 2,168 ahead in this investment. And the main difference, it costs you what, $45,000 extra on the way in there. So if you've got the borrowing capacity and for the NDIS, it's definitely one of the ways you want to go. Now, the investment checklist, it's important to understand the differences between residential investment and SDA investment. I would consider them apples and oranges. The final product looks very similar, especially from the outside, right? But there's a lot more that goes into the SDA investment to ensure that you're registered, certified, compliant, and you've actually got tenants that move into the property when it's completed and registered. So I like to think about it more like if you were setting up a business or you're doing a development, you're going to need to do you're going to have to spend some capital on the way in to ensure, that you've got everything, all your ducks in a row essentially before you go and build something or set up a business. So you got to understand that there are unavoidable costs. So you've got a certification process, and it's a two-stage certification process. And essentially, the pre-certification is, you know, you purchase the block of land and you put together your plans, for the with an SDA architect. Essentially, we always work with experts in the field, based on not only the requirements of the SDA, document, but you also want to be talking to providers and participants that could potentially be living in the property to ensure that you've got all the elements that, you know, they need in the property to provide the care for the participant and for the participant to live their best life, essentially. You don't want to have to go build the property and then go change things, you know, for the participant. We do all that work on the front end to make sure that we've got it all sorted out. So we do a lot of consulting on the way into a project. But the pre-certification phase is then what you need to do is take that plan and the block of land to a certifier and get it ticked off that, everything's going to meet requirements when that project is completed. The post-certification phase, at multiple stages through the build, you're going to need to get, parts of the build signed off by the certifier or an SDA build inspector to ensure that it meets compliance. And a lot of those elements can't be done on a final walkthrough. The best examples like the reinforced walls and ceilings. If you can't go through and check that, in a final walkthrough, so that they need to come through and do that. Now, enrollment into the scheme. We're dealing with the NDIS here. There's a lot of red tape, so we need to, get you registered, your property registered and enrolled into the scheme. And we've got the tenant acquisition side of things. So you need to become associated with an SDA provider, and there'll generally be some sort of consultancy fee to get the tenants into your property. And they may do things like psychometric testing or participant matching of some sort to ensure that you're you know you don't only just get tenants, but you've got a harmonious household where the participants are living together quite comfortably and not getting in each other's way. And they're having again, we're trying to improve the quality of life. So, we need to ensure that those participants will get along and they enjoy living together. A couple of other elements here. So we want to understand the SDA scheme. What is it for? Why are we doing things? That's why, like I said earlier, the key elements are actually the provider side. We need to ensure we're achieving what they want. The lending's pretty expertise. Yeah, again, I'm not a mortgage broker. I'm not a licensed mortgage broker, so I don't give too much information here. But we're finding that a lot of the bigger players in the lending space aren't giving favourable terms or just not lending in the space. So it's important to speak to experts in that area. Like I said, we only deal with SDA architects to put together our plans or SDA drafts people. You need this, a qualified SDA certifier. We do a lot of due diligence on the front end. We're out, the team go out and they fly to areas, meet with providers, ensure, ensure that there's, plenty of demand in the area. They look at, speak to the council about, what's being built in the area, ensuring that the supply side metrics stack up. So there is a lot of work being done at the front end of your project to ensure that it's successful in the long term. Secure an SDA compliant block of land. So, there are, accessibility elements to the block itself. Generally we're looking for flat blocks, certain sizes and things like that. But we're also looking for access to facilities. So like, where is the location? And again, like I said earlier, we don't forget the capital gains element of your investment as well. So we're looking for those, how much infrastructure is getting built in the area and those drivers. Last but not, oh, well, not last but not least, but the next section is the builder. So, obviously the building industry has had its challenges lately, so we need to ensure that, that we've got excellent builders, but we also have to find builders who are capable of building these properties and, they're actually willing to build these properties as well. So that they're not generally just a sort of, a rinse and repeat type builder. They're willing and capable to deal with the compliance side of the SDA investment. Generally, we're looking for builders who have done it before. And along with that, you need a project manager who can deal with that side of that investment. So a little bit of experience is always a good thing there. The due diligence on the SDA manager. So, there's a lot of SDA managers out there. I think there's actually thousands of SDA managers that have been, uh, registered and enrolled. Some of them are sort of mum and dad businesses, and then some of them are quite large entities. You want to make sure that you're working with the best manager or provider in the area. And that doesn't necessarily mean that they have to be one of the big players, and doesn't necessarily mean you want to avoid the small players. But you want to make sure that they're really great operators and they're looking after your tenants to make sure that they're happy in your property. So we do all the due diligence on the providers. Amy's role, she actually goes and meets with CEOs and operations officers to sort of vet their business and ensure that they can we can create a commercial arrangement with them and that benefits our clients. And we negotiate the terms with them. And then at the end, we need to secure participants into your home. Right, so get yourself ready. This is where we talk about how awesome Apollo Investment is. So we work for you and only you. So the guys when they put together Apollo Investment, they thought it was a really important element of the business was that we're always working for our investment. And our sort of philosophy is whoever's paying you is who you're working for at the end of the day. And that's why we set up this fee for service model. It's quite unique in this industry. Uh, you know, if we were just receiving commissions off a builder in this space, we'd be only incentivized to provide essentially a built structure. And in this scheme, it's like I said to you, it's really key element of the success of this scheme is to be really involved with the provider side and the care side. So that's why we didn't want to be linked into just providing buildings. That's fine in a residential space, but the SDA space is different. We're an SDA specialist. All we do is SDA properties. We're not dabbling in any other areas. Like I said earlier, we have access to the funding. I don't talk to you too much about that. Wholesale building prices. So one of the benefits of our fee for service model is we can go negotiate reasonably hard with our builders to ensure that you're getting an awesome rate because we're not getting a percentage of the build cost, right? So we're incentivized to actually bring that down for you because if we can lower the cost of the build, your return will be better and you're more likely to do business with us again. So that's one of the real key elements that benefits you in the fee for service model. Full transparency. So we actually don't accept any referral fees, commissions, any sort of benefits from third parties. In our contractual agreement with our clients, anything we receive from third parties, they get returned back to you, our clients. So, it sits with our fee for service model, but it's also the transparency side of things. We want to make sure that at the end of the day, we're always working in your best interest to put together a project within your goals and criteria. So the note that, like I said, that we're contractually obliged to return anything that we get back from any providers. Generally, we do receive what's called a marketing fee from a builder. It looks like a commission. We'll actually refund that to our clients, and that's generally somewhere between $20,000 and $40,000 that you'll receive back. At different stages, all builders pay at different times. And slab or frame stage is generally when you would expect that commission back in your pocket. Now, demand driven. Everyone may say that they're demand driven, but the reason we don't sell off stock lists and I don't show anyone properties at this stage is because we are actually demand driven. We don't put projects together until we have an investor and we need to match them with a demand that we've identified. So, we don't have builders that offer us stock and we go sell it because we don't believe that's truly demand driven. So we'll get an investor will come on board as one of our clients. We'll reach out to our providers, find out where there's areas of high demand. Then we'll acquire a block of land for our client in that area and put together a build project. So it has to be a little bit backwards and end user focused to be successful in this space. We can do more specialized projects. So if you wanted to do something like a knockdown rebuild within your portfolio requirements, that's definitely something we can assist you with. Network of developers. So, like all of the other elements of this business, we are, heavily networking with providers and builders and developers to try and get the best result for our clients. But the key element to the developer network is, we try to acquire land that's in sought after suburbs, but hasn't hit the market yet. So we don't have to compete and bid and essentially drive prices up. We want to get a really great price for anything we do for our clients. Faster build times. So these are the elements, the construction industry, time is money. right? So everything that we can deliver faster, potentially saves you holding costs. So we really try and drive that home with our negotiations and agreements with our builders. So things like faster build time frames, faster times to site, faster contract times, anything that we can potentially negotiate in as quicker, we try to achieve that with our agreements with the builders and developers. Tenancy, like I said, we got a full-time team dedicated to tenancy. That's headed by Amy. Her sole job within Apollo Investment is that, liaising and networking with providers to find, areas of high demand and what participants need, and, essentially provide a better outcome for participants. And like I said to you many a times through this presentation, if we can provide a better outcome for participants, your investment is going to be safe. And then last but not least, full project management. We look after everything from start to finish for our clients. It is very stress-free for you. So end-to-end project management. We will look after all of the due diligence on the way in. So we're doing all that consulting on the way in. We're inspecting sites, inspecting builders, looking at compliant blocks of land. Essentially as one of our investors, all you'll have to do is, give us the thumbs up that you're happy with the project that we present to you, read and sign the contracts, and then pay the progress payments as they go come up. And then we work all the way through to when the second participant is placed into the property, and we receive our last fee from our clients when that second participant is moved into the property. So we've actually we like to have some skin in the game of all of our projects. So that's why that model has been put together. It's been done very intentionally to ensure that we get the end result for our clients. A little bit more about Nick's process and dealing with builders. So he's constantly looking for, you know, uh, excellent builders that we can work with, and doing all the due diligence for our clients on the build side of the business. So we need to find the right builder. Like I said earlier, the construction industry has had its challenges over the last few years. Some of that stuff is easing up, but it's still ever present. So we need to ensure that we mitigate any risks or concerns around the build for our clients on the way in. And so we're very picky with the panel of builders that we put together. And Nick's doing a lot of due diligence constantly to find the best people for it to deal with in certain areas. So it's not only, inspecting builds for the quality of the build and ensuring that they've delivered compliant products, properties. We also need to see, financial evidence that they're trading. They've got plenty of liquidity. They're paying their trades. They've got, cash in the bank essentially. We need to ensure that, there's no concerns or risks around that for our clients. We're also, if they promise us a build time frame, we want to see evidence of that. So, their last 5 builds, for example, we might look at the time frames there. And then how much control over the process do they have? Obviously, you don't get the perfect density that's fully vertically integrated, right? But if they've got a little bit more control over their, let's say, a mate of mine owns a building company, he has also a carpentry company, so he has some vertical integration. That's the kind of things that we're looking for. How much control over their trades and supplies do they actually have? And like I said, you don't get the perfect density, but more is better. And then, we put together commercial agreements. Typically, we'll go into an area and we don't build hundreds of properties into an area, but we may build somewhere between, 4 and 8 properties in an area, for example. So we can put together some volume deals with builders, which allows us to get, a better, you know, construction costs for our clients essentially. And like I said earlier, like speed to market agreements and things like that as well. Okay, and we've also got Amy here, and like I said, her job is on the tenancy side. So essentially, Amy's very, she has a lot of control on where we actually like to do our projects. So she's out there, like I said, speaking to providers. It's very much feet on the ground networking with relevant people in the space. So she's not just talking to like an admin, like a front desk person at a provider. She's talking to operations managers and CEOs and people like that, who she can meet with, and they'll actually talk to her about where participants are, what they require in these homes, when they're going to be ready to move into these properties, all those key elements that we need to know to ensure that you're going to be successful in this space. So that's that identifying real need. So we need to talk to key players in the industry to ensure that we're matching up with, there are statistics out there, but we need to ensure that we're getting real live, real-time data on where participants are, who's going to be funded soon, and what they want in these properties, which is the key element as well. Uh, So yeah, that's really important. She does all the due diligence on the the demand side metrics, but also the providers themselves, because that's a key element to the success in your investment. And then putting together agreements with those providers to ensure that you know we've got excellent commercial agreements that benefit you guys at the end of the day. And like I said, we negotiate them down to 13, so 12 or 13% to provide that service. It's not uncommon to see 15 to 20% and sometimes even more in this space. Now, this is our full process and dealing with Apollo Investment. So this is our full project outline and when all of our fees and everything is due. So a whole heap of tiles will come up explaining, what's due when and all the milestone payments. Now, what I like to get it out in front first because otherwise it can get confusing when it's broken down. The full fee structure to partner with Apollo to look after your project is 74,990 plus GST. Now, Apollo Investment doesn't make $74,000 per project. We include all of those project costs that I mentioned a few slides earlier. So, like I said to you, that can be $35,000 to $40,000. We cover all of those elements, just to ensure that your project runs smoothly. But the other reason that we like to ensure that that's in our service fee is if it's not in the build contract, like I said, some groups may do. We've never had any valuation issues because of how we do this process. So there's reasons why we've done it the way we have done it. So we're currently in the presentation stage, and I'm going to meet up with you, face to face or on phone to discuss this investment any further. But if you're happy with Apollo Investment and you've liked what you've seen today, what we ask is a small commitment fee of $990. Essentially, what that is you're serious and you're committed and you're ready to move forward in the process of the NDIS investment or the SDA investment. What we do there is we issue a confidentiality agreement. We need to protect our IP associated with this investment. Essentially, we're protecting ourselves from the sharing of our documents and locations and stuff with other groups. And then what we need to do next is a lending assessment. So I'll send you a fact finder to send through to the relevant professionals that can give you advice on those specific elements like the lending. And I line up 3 meetings from there. So the first meeting we have is with Coy. Like I said, he needs to review your structures to ensure that all your entities and trusts and companies or whatever you need to set up is correct for this investment. Uh, you know, and linked back to your goals and your financial position at this point in time and where you're going to take this, what are your goals in the future? He's a very smart man when it comes to sort of that kind of thinking. We need to meet with the finance team, so I'll introduce you to one of the brokers at the Melbourne Mortgage Company. Part of their business is called the NDIS Loan Experts, and they will talk to you about all the options around NDIS lending. And then last but not least, we have our first discussion with Nick. At that point, he doesn't present any properties to you, but he's going to talk to you. It gives you the opportunity to discuss what he's been doing lately, what inclusions there might be included, any of those key property elements that I may not have answered in this discussion, for you to sort of learn more about the actual property and the build process, and areas that have been successful lately as well. Then what we do is I put together what's called a personalized conceptual proposal. This is essentially an investment proposal based on your individual circumstances. So Coy may say to us that you're going to be setting up a trust and splitting the income between you and your wife, or something like that. And the finance team might say that you've got something like 6.79% lending or something like that, and you're going to borrow 80% of the loan, 80% of the project costs. And Nick might tell me that it's more likely that your project's going to be around $900,000. But I need all those key elements to put together an investment proposal for you. And then I use some software and I actually build out a personalized investment analysis for you based on what you're likely to achieve in this space. From there, we issue the client service agreement. So this is our contractual agreement with you. We need to make sure that we have a serious contract obligation to you to provide what we're promising. So that's why that's in place. Then from there, the project begins. This is the key sort of start process of the investment. So we ask for $8,000 plus GST at that point, and this is where we go and put together your project. Now, if COI has recommended any entities and trusts to be set up, we'll just cover that. We like to just get that moving quickly and get that process done as quick as possible so that we can be presenting properties to you acting on the behalf of the entity or the trust. So we can't present you properties beforehand if that investment, if that trust isn't set up yet. So that's why we do that. Then we're consulting with the SDA providers in the areas. So Amy's out there finding areas of high demand that we can present to you as potential projects, project locations. And within that, we're also finding compliant blocks of land in that area. So, we're establishing demand and then finding compliant blocks in that area. And, we've got the sort of sourcing plans and putting together what your build will look like at that stage. And sort of the early participant matching is happening at that stage as well. So the FDA providers are talking about who could potentially go into that property. Expressions of interest are in place at that point. Then, you're giving us the thumbs up, you're happy with the project, we're moving forward. The first milestone payment here is the land contract going unconditional. So we're looking at 23,500 plus GST at that point. We are working with your SDA consultant, the SDA consultant that you're going to be working with in the future, and the SDA specialist architects to put together the finalized plans for your, to finalize your build contract. So we need to get that done. And, we're looking after the execution of your land contract, all the preliminary works on the way in, so all that due diligence work and anything to do with the actual construction and property, and pre-certification phase where we're taking the plans and the land to the certifier to ensure that the complete project will be compliant. So that's that two-stage certification process I mentioned earlier. The next stage is when the build contract goes unconditional. So we're looking at that 23,500 plus GST at that point. We are executing your build contract. We're looking after your land settlement. We're looking after all on-site construction elements, post-certification. So like I said, in that second stage certification process, either certifiers or SDA building inspectors need to go through the property, ticking off that the modifications are up to standard. Then we're dealing with all the enrollment process and the tenant acquisition process. So getting you aligned with an SDA provider and, the consultancy fees associated with getting participants into your property. Now, like I said, we as a group, we don't accept any third-party benefits, right? Any commissions, referral fees, or anything like that. But builders always pay like a marketing fee or a commission to groups such as ourselves. So we have this third-party agreement. All the builders pay different amounts, and each project's different, and they all pay at different timeframes. So that's why I've got a range for you at this stage. Anywhere between $20,000 and $40,000 will be refunded to you at the stage that we get paid that. Like I said, each builder pays at a different stage too. It's very common to be at slab and frame stage, but it's not uncommon for it to be split between two phases as well, where you get half at one stage, half at the other stage. And then last but not least, this is, like I said earlier, we've done this very intentionally to ensure we're incentivized, our incentives are aligned with our clients. Okay. So our profitability per project generally sits somewhere between $15,000 and $19,000, which we think is pretty reasonable and fair on a, $850,000, $900,000 project. We have linked that into your success. So when your second participant moves into the property, that's when we invoice that final milestone payment. So, everything else has just been covering, running costs and certification costs for your project. This is it's the key element of our business. We're really focused on investment success and tenancy. We finish off your enrollment process. We get all your SDA agreements executed, and we get those participants placed in your property. So, like I said, when the second participant moves in, that's when that milestone payment is due. All right, so that's what I just showed you was the pro package is this one here. So you've got the $990 sort of commitment fee on the way in, and then the $74,000 plus GST, project costs to look after the full project for you. The other packages we have here are, the starter pack here is generally like an SDA provider has a block of land and they've approached us and all they want us to do is build a, compliant property on that block of land. We have nothing to do with choosing the location and doing any of the due diligence at the front end around tenancy and what participants require and where they want it. So we throw our hands up at that. All we're doing there is assisting with the build process. So, it's only, sort of maybe, 1 in 100 clients that could potentially benefit. And then last but not least here, sort of the premium package is for more special projects. Say you wanted to split a block, or you want to do a knockdown rebuild or something like that. We're going to need more involvement, to specifically find participants in that area, and what the demand is. So you're gonna need more access to Amy's team, and you're gonna need more access to Nick to acquire that specific block that you want to, within the requirements of your portfolio. So that's why that one is the premium package. We're sort of thinking that later in the scheme, as it matures, that may be uh, one of the realms where we have to do more work. So that's why that package is there. And then last, from here, I've presented all the required information to you at this stage, and then we take that 990 commitment fee and move you forward into all those relevant appointments. I didn't mention earlier that 990 is refundable on a finance clause, so we need to make sure that you've got a viable project there. We don't want to take your money if we can't do a project for you. Uh, so yeah, 990 booked into Sequoia. Let's get your structures and entities sorted out and get ready for such a high yielding investment. Then we need to get you in to speak to a broker to make sure we can get you financed and you can service the project. Speaking to Nick about what projects we've been doing lately, and what's a likely area that you go into. And then we'll move into the actual, getting the ball rolling and getting that investment moving forward. Like I said, reach out to me, send me an email, dave@apolloinvestment.com.au, or you can send me a comment on this video and I'll get in touch with you. Thank you guys. Talk to you later.